Welcome back. Mitch Argon here with Calneva Realty. In the next few minutes, I'm going to take you through an update on market conditions for October 2020. Let's get started. Okay, on the pricing front, we've seen the Sparks and Carson City markets hit new median price highs and strong growth in price throughout the region, as you can see on the chart. When you look at this over the last 6 months on an average basis to give you a truer view of what's really happening with price appreciation, you can see that the markets closer to the Sierras, Reno through Carson Valley, are running 7, 9, 6, and 10%, while Dayton and Fernley, the markets in Lyon County, are running at 4 and 5%. So we are seeing stronger demand and stronger growth in the larger markets here. Of course, you can see in Tahoe steady growth as well in the median price. Okay, with regard to homes sold and inventory, what you can see is that we've had a dramatic increase in the number of homes sold. I'll share some more of that view a little bit later. Much of this is a function of low interest rates and some of the unintended consequences of the COVID-19 lifestyle that we've been under for the last 6, 7 months. But you can see that the rate of growth in homes sold on a year-over-year basis is quite strong. At the same time, inventory is substantially down from the same time last year in 2019. And you can see that reflected in the numbers here. It's quite dramatic, actually. Month supply of inventory is kind of a combination view of both of those things. And so what you can see is that the month supply of inventory has shrunken since October of last year to October of this year, quite a bit in all markets. And it's down at a rate now you can see in some markets where it's measured actually in weeks. For example, Sparks is a half a month of inventory. So what that means is that if no new listings were to come on the market in Sparks for 2 weeks, we would, at the current rate of selling homes, we would exhaust all available homes for sale in the market. Okay, so since March 16th, which was the date that we basically went into our shelter in place, which has subsequently been released, we have seen homes going under contract at an increased rate over 2019 at 25%, which is quite a bit more volume going on. At the same time, we have seen new listings coming to market down 22% since that same period in 2019. So when you add those two things together, it's a 47% impact on the marketplace, and that is what's behind the increase in price that we're seeing right now. So when we break this down on a week-by-week view, what this chart shows you is between the green vertical line and the red vertical line, the period that we did have the shelter in place. And you can see that the new contracts or new pending sales did dip down and then dip back up. After that red line was achieved or passed, we have seen new homes going under contract or homes going under contract in any capacity throughout the region at a dramatically higher rate than what we were seeing in 2019. And that continues on a week-by-week basis up through just this last week. With regard to new listings, what you see is a decrease in activity of new listings coming on during the shutdown, but a much slower recovery on new listings coming on. So you can see demand has far outstripped supply by looking at these two charts. Now, just recently, over the last month or so, we have seen the rate of new listings coming on be about equal to what we saw in 2019. So that's a good sign. However, we still have a shortage of inventory due to the fact that we had a significant drop compared to the same period a year ago, as well as a much higher level of demand. Quick recap on the numbers. 2 markets had median price highs. As we've discussed, the markets continue to move deeper into seller market territory, which is putting upward pressure on pricing. With regards to COVID-19 impacts that we're tracking, we continue to see an acceleration of this migration phenomenon from higher density to lower density areas. We're seeing this in the Tahoe market, probably more dramatically, which has historically been a second home market, is becoming more of a primary home market. We're seeing it in all of the markets here throughout the valleys as well. On the concept of mortgage forbearance, as this pricing continues to increase and as we see employment slowly getting better, which I'll discuss here in just a moment, That appears to be something that at this point may be held in check as we've been watching and talking about. Time will tell on that. The experts think that it's probably going to be something that's going to be absorbed into the marketplace versus causing a major drop in prices due to having a lot of distressed properties. On the unemployment picture here in the state of Nevada, things are looking in the right direction. We still got a ways to go. As you can see on the chart down below, most of the rates dropped between about 1%, between 0.8% and 1.1% since July going into August, which is the most recent data that we have. So statewide, we're currently running at 13.3% unemployment. In the region here in the north, however, we're running just over 7%, as you can see down below. Las Vegas, of course, having a greater impact. They're at 15.5%. But as you can see, that's down from over 16.6% just last month. We still have a ways to go because a year ago in August of 2019, the unemployment rate was running in the 3 to 4% range in general throughout the state and the major regions. So there's some room to go on that, and hopefully that will be absorbed and keep things stable for everybody who's involved. Okay, that wraps up our October 2020 update. If you are interested in getting more information on any of these market conditions, there is a link just below this video here on YouTube that has access to the Greater Reno Tahoe Real Estate Report. It has more tabular data and tables and more charts on specific markets if you wanted to take a look at that and get more details. I hope this has been helpful for you. We will see you next month. Have a great day.